All right, so that brings me to the combined 401k, profit sharing, and cash balance plan. So like I mentioned earlier, a lot of our older dentists that are successful, well-established practices, we're doing a combination of multiple retirement plans. So we'll combine a 401k plan with safe harbor and profit sharing, and then separately implement what's called a defined benefit cash balance plan. Those plans combined could result in significant tax savings. So again, generally, if you're an older dentist with younger employees, this plan, a combined plan such as this could be very appropriate for you. And it could allow you to put away several hundreds of thousands of dollars per year on a tax-deferred basis. To illustrate this, we use a simple example here. So assuming you're a 52-year-old individual, in 2025, you may be able to put away up to $77,500 to a 401k plan with profit sharing, and an additional $336,000 into a cash balance plan for a total contribution of $412,500. So again, what does this do and what is the purpose of this? So if you're an older dentist that did not do a great job of saving during your earlier working years, this gives you a great way to play catch up and put away a significant amount of money over a short period of time to help fund your future retirement goals. So the following chart is just a hypothetical. It's not a real example, but it basically shows how this strategy would work with a dentist who's 55 years old, making over $350,000 a year, with a spouse who's also over 50 years old, making around $60,000 a year, and has 4 employees working for their practice, all of which are 30 years old or younger. Again, many dental practices do have these type of demographics, and these type of plans could work here. So in this hypothetical example, we basically have the practice is doing a 6% combined profit sharing and safe harbor contribution to their staff, and they're contributing 2% of the employee's salary to a cash balance plan. So this is basically allowing the owner here of this practice to put away over $412,000 to retirement. Almost $400,000 to retirement, where they're getting about 98% of the overall benefit. So generally when we're talking with clients, a lot of them don't always want to put a lot of money into retirement plans for their employees because they feel they don't always appreciate what you're doing for them. But if you could be doing this and getting 98% of the overall benefit, definitely is a win-win there. And the other thing I always tell clients is that you want to position this as a great added benefit that you're providing to your employees. So it helps keep good employees, and it will also help you attract great employees for the future of your practice as well. All right, so these are basically a chart that shows at each age level what the maximum retirement contribution would be under a 401k plan, 401k with profit sharing, cash balance, the total contribution between those plans, and then what the ultimate tax savings are. So if you're 30 to 34 years old, combined plan may not be the most ideal plan for you because you may be limited to only putting away about $150,000. But again, we do have some younger dentists in their early 30s or even late 30s that feel they're making great money. They want to get the added tax deduction, so they'll take advantage of this even at a much younger age. The only thing to keep in mind there is that there is an upper limit of what those plans can grow to. So if you start at a younger age, there's a good chance you're going to hit that limit a lot quicker than an older dentist may reach it.